today we are going to do session number 9, chapter Ratio Analysis. Ratio Analysis. Earlier we have completed partnership, company accounts, shares and debentures. Then in the previous class, I have completed financial statement and financial statement analysis. If you have any doubt in those chapters, please watch the videos. Try to do the quizzes, then you will be able to solve the questions. So today in ratio analysis chapter, first of all, I am going to give you some MCQs, then we will do numericals questions based on it. Okay? Please try to give the answers. So first of all, this is the latest paper pattern. Okay, 34 questions. Out of 80 marks in 3 years. Now, in this session, first of all, I want to tell you, you will get 3 questions, 1 marker, 3 marker, and 4 marker. Okay, and you will get 1 internal choice as well. Now, see. Yes, please. Now, please ready to give your answers. See this one, match list. Accounting ratios with list 2. 1. Match the formulas in list 2. Okay. Select the correct answer using the codes. So as in the previous classes, I have explained you how to use elimination theory. You will be able to do the match the column questions easily, as you are assured in current ratio. Okay, so match it. Current ratio A with 4. So your option will be cut here, these 2. Now A will be 4. You will have in these 2. Now second, you clearly know that trade receivable turnover ratio, that is credit revenue from operation upon average trade receivables. So D will be 1. So again, you will have same choice. Okay, so you have tie between B and C. Okay, first option is also similar. Last option is also similar. Now you will think about that. Return on investment. Okay. Return on investment will be related with net profit before interest and tax. So B will be 3rd. So we can think about this. Clear? Now interest coverage ratio. Interest coverage ratio will be profit before interest and tax upon interest on long-term debt. So C will be 3. C will be 2 now. Okay. So from this point, we can come to know. Yes, someone has given the answer as well. Yes, Himlata, your answer is perfect, my dear. See, here I am explaining you to solve the questions of coding. Okay, so our answer C is perfect. C is perfect. Yes, Himlata, keep it up. Good. Now see, a transaction involving decrease in both current ratio and quick ratio. Yes. Question number 2. Current ratio and liquid ratio both will decrease when purchase of stock in trade on credits. Now I am sure that everyone will, you will know that 3rd question. Ideal current ratio is, yes children, fast. Ideal level of current ratio is, ideal level of current ratio is, what do you think? What should be the answer? Ideal level of current ratio is. So if you are thinking that 2:1, yes, it is correct. But some other option is also available like this way. Yes, please think about it. That is for your confusion only. So here, immediately you will give the answer 2:1. But my dear students, here another option is 4:2 is also there. Like when we simplify it, that will be 2:1 again. So our answer will be both A and B. Okay. Because when you simplify 4:2, you will get the answer. Yes, Chavi, oh, Aditi, yes, Aditi, your answer, Chavi's answer. Everyone is giving correct answer. Very good, my dear children. You are here to encourage us as well. So maybe they will give you the 1 point like this way. Here I am going to give you like 4:2. When you simplify it, that will come 2:1. Maybe they can give you that way, 32:16. So, or twice is to 1. So the answer will be both A and B. Clear? So generally we can say that current asset must be twice, then current ratio will be appropriate or ideal. Next question. Yes, working capital is the cash and bank balance, capital borrowed from banks, difference between current asset and current liabilities, difference between current asset and fixed asset. Yes, what do you understand? What is the meaning of working capital? And next question as well. Next question. If the liquid ratio of company is 1.5:1, if the company purchase goods of rupees 50,000, it will. Yes, please. If the liquid ratio is 1.5:1, then the company purchase goods of rupees 50,000. Same as question number 3. Yes, my dear children, see, working capital is the difference between current asset and current liabilities. That's why we have one formula in our books that working capital is equals to CA minus CL. Okay, working capital is equals to CA minus CL. Now they are saying you about liquid ratio, acid test ratio, quick ratio. Okay, all the three names are similar. Liquid ratio, acid test ratio, quick ratio. So it will decrease the ratio because company is purchasing goods. Okay, now see, collection of debtors. Collection of debtors. Decrease the current ratio, increase the current ratio, has no effect on current ratio, none of the above. Yes, children, I want to tell you something about that. Here, how to do these type of questions. Collection of debtors means cash plus and debtors minus. So one CA is increasing, another CA is decreasing. So we can say no effect. No effect, because collection means cash increase. Cash is a current asset that will increase. It is received from debtors. So debtors are now reducing. So current asset also decreasing. So we can say no effect. Now here, Harshita Limited has a proprietary ratio of 25%. They want to increase it. So management may increase the equity, reduce the debt, either increase equity or reduce debt, both. Please note down the answers. Note down the answers. As you know, shareholders fund, proprietary ratio is having one formula, that shareholders funds upon total asset into 100. So company may either increase the equity or reduce the debt, then they will come to the higher proprietary ratio. Next question. Yes. Please note down the answers. Collection of debtors, no effect on current ratio. And Harshita Limited has proprietary ratio of 25% and they want to maintain it at 30%. So they either increase the equity or reduce the debt. Now, please come to the reason assertion questions. Many students are having doubts in reason assertion questions. Yes, please. Personal bias can be reflected in ratio analysis. Different people may interpret the same ratio in different ways, which affects its trustability. So, yes, what do you think? What should be the answer? Yes, assertion is correct. Personal biasness can be reflected. Okay, and see, different people may have interpreted the same ratio in different ways. So we can say both are correct. Reason and assertion both are correct. Next, fixed assets are of rupees 5 lakh, current asset rupees 3 lakh, equity share capital 4 lakh, reserves 2 lakh, long-term debts 40,000. What will be the proprietary ratio? I can help you out in solving this one. So it will be easy for you. First of all, we have to calculate shareholders' funds. First of all, we have to calculate shareholders' funds. Here I am giving you the clue, share capital plus reserves and surplus. And second thing, total asset, it's very easy, fixed asset plus current asset. Yes, children, now it's your turn to find out the answer. Yes, children, fast. What is your opinion? Please let me know. Proprietary ratio will be here also. We can do that is debt equity ratio. Debt equity ratio, the formula will be debt upon equity. Here debt means long-term loans and debentures. So debt is equals to long-term loans or percentage debentures, which is given 10 lakh, and equity, same way, equity is equals to equity share capital plus reserves and surplus. Yes, I am sure you all have calculated. Yes, Aditi, what's your answer? Yes, children, this is 75% and this is 0.4:1. Okay, I am sure you all are able to do that. Proprietary ratio and debt equity ratio, these are the part of solvency ratios. Okay, see, ratios are divided in 4 parts. First is current ratio or liquidity ratio, which are of 2 types, current ratio and liquid ratio. Then second is solvency ratio. Okay, solvency ratio is also debt equity ratio, total asset to debt ratio, proprietary ratio, and interest coverage ratio, ICR. Yes. On the basis of the following data, debt equity ratio of a company will be equity share capital, general reserve, and debentures given. Okay, so just now I gave you one formula, the debt equity, debt upon equity. Okay, so 3,20,000 upon equity means equity share capital and general reserve. So 3,20,000 upon 8,20,000. Your answer will be 0.39:1. 0.39:1. Next. On the basis of the following information received from a firm, its proprietary ratio will be fixed asset given, current asset given, equity share capital, preference share capital, and reserves and reserve funds or reserves and surplus. Now, proprietary ratio. Yes. What will be the formula for proprietary ratio? Yes, children. Same, which I told you just now. Proprietary ratio is equals to shareholders fund upon total asset. So here, see, the total asset is of 5,20,000. As you know, that fixed asset and current asset, and shareholders fund means ES plus PS plus reserves and surplus. So shareholders fund will be 4,72,000 here. Now it is in percentage, that's why we have to multiply it by 100. Okay. See, proprietary ratio can be calculated by two ways. In pure form means is 2, or in percentage form means multiplied by 100. Yes. So we can come to know that it will be near about 90%. Yes. See, now the turn is of activity ratios. Activity ratios are related with revenue from operation. Okay. And it is also divided in 4 parts. Stock turnover ratio, which is also known as inventory turnover ratio. Debtors turnover ratio, which is known as nowadays trade receivable turnover ratio. Creditors turnover ratio is nowadays known as TPTR, trade payable turnover ratio. And last is working capital ratio. Okay, so now see, the question is here, opening inventory is 1,20,000, Corfo is 10 lakh, inventory turnover ratio is 5 times, then the closing inventory 5 times. Okay, so full stop, then the closing inventory will be. Now here I am going to give you very easy way. ITR, inventory turnover ratio, is Corfo, cost of revenue from operation, upon average inventory. Now ITR is 5. Corfo is simply given in the question, that is 10. So average inventory we can find out. This is average inventory by cross multiply. That average inventory will be 2 lakh divided. Got it? Yes. Now you know the formula of average inventory. 2 lakh is equals to, formula is opening plus closing inventory divided by 2. This is the formula of average. Now cross multiply, 4 lakh is equals to opening inventory given 1,20,000, but we don't know about closing inventory. So when you bring that side and divide minus, then you will come to know that 2,80,000 will be closing stock, or we can say closing inventory. So first of all, fill those information which is given in the question. Then you can come to know the another thing which is missing. Please see that. Now try to do this question. Here 25% GP is given. And inventory turnover ratio is also given. So by the same way, but first of all, here revenue from operation is given. So we have to find out the Corfo first. Corfo means cost of revenue from operation. Okay. Yes. Children, I am waiting for your answer of question number 14 because 13 I have solved and solved, that is 2,80,000. Now please try to do that question because these are just similar, but only one difference is that RFO given 2 lakh and GP 25%. So 25% of RFO, that is 50,000, must be subtracted to calculate the Corfo. Yes, to calculate the Corfo. See, in your childhood, you have learned one formula, selling price minus profit, then you can come to know cost price. In class 5th, 6th, you have learned that formula, that selling price minus profit, that will be cost price. Same way, now selling price is known as RFO, profit is known as GP, and cost price is known as Corfo. So you can use your formula of class 5 in class 12. Got it? Now see, this is Corfo. Yes, children, please give your opinion. So here, Corfo is given. Now we have to use the same way. And with that, we can come to know the average. Okay, see, ITR, inventory turnover ratio, is Corfo upon average inventory. ITR given 5. Okay, see here, that is 5. Corfo given 1,50,000. By the use of that, we can come to know average inventory. Average inventory will be 30,000. Okay. Now, average inventory is equals to opening plus closing divided by 2. So when you multiply it, 60,000 is equals to, here opening stock is not given as well as closing stock is not given. So we can put this formula X plus 8,000. Children, see, opening inventory, we think that it is X and closing inventory is 8,000 more. So we can put it in the more, means plus. Now you can come to know that X is equals to X, the value of X will be 26,000. This is opening stock, and value of closing stock will be 8,000 plus, it means 34,000. Yes, please. Note down, children. See, for the practice for CBSE as well as for CUET, you have to be perfect in these ratio analysis questions. And these are activity ratios. Inventory turnover ratio, trade receivable turnover ratio, and working capital turnover ratio. Okay, and you can use the formula which you have learned in class 4 and 5. Selling price minus profit is equals to cost price. So here we can say the selling price is 2 lakh. It includes 50,000 profit. It means cost price is 1,50,000. And in inventory turnover ratio, we have to use the formula cost price. Yes, Rishika, your answer is perfect. That is 34,000. Good. So Rishika's answer is perfect, 34,000. So Rishika, your answer is perfect, beta. Yes, now I am going to do the next question. So we discuss the answer. This is 2,80,000. Okay. And this is 34,000. Clear, children? Any doubt? Yes. Next. RFO 6 lakh, gross profit 20%, office expenses 30,000 and 48,000. Calculate operating ratio. Don't be confused that RFO is used only for inventory turnover ratio. That will operating ratio. Okay. Yes, children. Now do that. Operating ratio. How to calculate operating ratio, children? Operating ratio. Do you know the formula of operating ratio? Operating ratio will be simple formula CORFO plus operating expenses, okay, minus other income, okay, upon net RFO into 100. Here, CORFO given 4,80,000, operating expenses given 30,000 and 48,000. Clear? RFO also given 6 lakh. So now simply we can calculate. Okay, that is 5,58,000 divided by 6 lakh into 100. So your answer will be 93%. So answer D will be perfect. Which of the following is expenses? Yes, A, B, C, D, all are expenses. A, B, C, D, all are expenses. Yes, children, match your answer. This is 93%. This is D. A, B, C, D, all are expenses. Now, net operating ratio determines overall efficiency, working efficiency, overall efficiency of the external market, none of the above. Operating ratio determines working efficiency of the management. Working efficiency of the management. Overall efficiency of the business. Net operating ratio shows working efficiency of the management. Now, please come to know the next formula of solvency ratio, that is interest coverage ratio. Net profit after tax 12 lakh, 10% debentures and tax rate 40%. Yes, children, now try to do this question fast. Okay, I'm going to help you out for calculating this formula. Yes, the formula is interest coverage ratio, ICR. Interest coverage ratio is equals to net profit before interest and tax, NPBIT, upon fixed interest charges. Fixed interest charges. Yes, children, I'm sure you all are able to do that numerical now. Waiting for your answer of 18 and 19. Fixed interest charges. Now, little bit confusion in this question. See, the profit is after tax. So what to do now? we have to calculate that profit before tax, because in the formula it is given before. So be careful. Profit given after tax, we have to calculate before tax. It is after tax and we have to calculate before tax. Be careful about that. So that 12 lakh is deducting after deducting tax. Okay, so how to calculate that this 12 lakh is at 60%, we have to calculate it for 100%. Okay, so that will come 20 lakh now. Okay, and then fixed interest charges, that 10% of this 1 crore, that will be, this is plus tax, and this is after. This profit is after tax, we have to calculate before tax. Okay, so now that will be 30 lakh. Okay, and fixed interest charges is just now you have calculated 10% of 1 crores, so that is 3 times. Interest coverage ratio is also calculated in times. Okay, 3 times. Now, which one of the following is correct? Quick ratio can be more than current ratio. High inventory ratio is good, except goods are bought in small lots or sold quickly at low margins to realize cash. And third, sum of operating ratio and operating profit ratio is always 100. Yes, children, note down this one, because this question came in CBSE many times by different ways, by giving numericals as well. Operating ratio and operating profit ratio, when we add these, that will be equal to 100. Yes, so here in question number 19, all are correct. Note down. I'm sure you all are able to do the interest coverage ratio now. So your answer will be here. Your answer will be 3 times. Here, your answer will be second and third are correct, because quick ratio cannot be more than current ratio. Because why? That I want to know. Why quick ratio cannot be more than current ratio? Because quick assets are always less than current asset. That is the reason. Because in the current asset we include inventory and prepaid expenses, but in liquid asset we can't. So C answer is perfect. Only second and third are correct. First is not. Now 3 marker questions. Very good question. Operating ratio given, revenue from operation given. Children, note down the questions, because these type of questions you will get in CBSE as well as in CUET. Note down the question and try to do it. Net profit ratio. See, in this question, operating ratio given, gross profit ratio given, non-operating expenses given, non-operating income given. What will be the net profit? What do you think? What should be the net profit? Yes, here, see. Operating profit ratio is equals to 100 minus operating ratio. That will be 10% only. Just now I gave you one point that always operating profit plus operating profit ratio, the sum will be 100. So here operating ratio is given 90%. So we can say that operating profit ratio will be by this way. Operating profit ratio will be 100 minus 90. That will be 10%. Okay, now this 10% is of RFO 10 lakh, so that will come 1 lakh. Now net profit, you know the formula. Yes, operating profit is also known as EBIT, earning before interest and tax. And I told you how to calculate that formula. Net profit, okay. Please note down the formula. Yes, next. Company's liquid assets are 5 lakh. Current liabilities are 3 lakh. It paid rupees 1 lakh to its trade payables. Quick ratio will be, yes, children. Give me the answer of this question. Liquid asset are 5 lakh. Current liabilities 3 lakh. They paid 1 lakh rupees to trade payables. Now quick ratio will be. Now. Not before, after. Yes, children. What do you think? What should be the answer? Yes. Give the answer. Yes, children. Show me the answer, bachon. Yes. Okay. If you have doubt, I'll solve your doubts here. See here. Paid rupees 1 lakh to its trade payable. So when they paid 1 lakh rupees, okay, cash is going out by 1 lakh rupees. It means liquid asset, new liquid asset will be now 1 lakh minus, so 4 lakh. Okay, now 1 lakh rupees paid to trade payables. So trade payables also reduced by 1 lakh. It means now current liabilities also reduced by 1 lakh. Okay. Now what is the liquid ratio? Simple formula. Liquid asset upon current liabilities. See, for confusion, they can give you 3 names of liquid ratio. What are the 3 names of liquid ratio? Yes, quick ratio. Another name is acid test ratio. So liquid asset here, that is given clearly 4 lakh. Current liability 2 lakh. So it is 2 by 1, or we can say 2:1. So here, when they paid 1 lakh rupees to its trade payables, okay, so here cash is reducing by 1 lakh, as well as liabilities also reduced by 1 lakh. Clear? New quick ratio will be 2:1. Now we will do the next question. This is the question. Find the value of current liability and current asset. If current ratio is 2.5:1, liquid ratio is 1.2:1, and the value of inventory is 78,000. Yes, children, it's my request to you, learn the formulas for this chapter. Same here. See, I told you just now, when we deduct current asset and liquid asset from current asset, we can come to know that this is inventory. Okay, so here this is current asset 2.5x. This is liquid asset 1.2x and inventory is 78,000. Now 1.3x is equals to 78,000. X is equals to 78,000 divided by 1.3. That will be 60,000. X means that is current liability. Okay, X means current liabilities. This is current liabilities. Now they are asking you about current asset. Simply, when you multiply it by 2.5, you will come to know the value of current asset. That is 1,50,000 rupees. Got it? Yes, children. Give your opinion. Give me the answers. Are you able to understand or not? Just learn the formulas. See, these are the formulas I want to tell you to learn. Like here, this is liquid ratio, one formula, other name. Here, another formula, that is. So you have to learn the formula, then you will be able to do the questions. Basic difference between current asset and liquid asset is inventory and prepaid expenses. If in this question prepaid expenses given, we can take them also, because that is the reason of difference between current asset and liquid asset. Okay. Okay. Note down, children, how to do that question. This is the fastest way. Or here I want to give you one more thing. If current asset reduce, current liability reduce, current ratio will increase. Same here. Current asset reduce, current liability reduce, so ratio is increasing. Here I am going to show you the way. See, this is the answer, 2.2:1. Just now I showed you. And these are the current asset and current liabilities. Clear, children? Next question. Sushi Limited has current ratio of 4.5:1, quick ratio 3:1, inventory is 36,000. Calculate current liabilities, liquid asset, current asset. That question came in CBSE for 3 marks. Yes, children. What is the answer of Sushi Limited? Let me know. I'm sure you all are doing. Am I audible now? Yes. See, you can do it by this way. Given current ratio is equals to 4.5:1. Liquid ratio, quick ratio means liquid ratio, that is 3:1. And inventory given. Inventory is equals to 36,000. Now, children, just now I told you current asset minus liquid asset, that is inventory. Here it is given clearly that 4.5 we can put x and 3x is equals to 36,000. So 1.5x is equals to 36,000. X is equals to 36,000 divided by 1.5. So X is equals to, okay. So your answer will be 24,000. X means what? X means current liabilities. Now, how to calculate CA? Yes, children, please let me know. Give me your opinion. What is your answer? Yes. Now, current asset is equals to 4.5 into 24,000. Clear? Because this is 4.5x. So X current asset is equals to 4.5 into 24,000. That will be 1,08,000. And liquid asset, or we can say quick asset, is 3 into 24,000. That will be 72,000. Okay, so these are three are the answer, and that question may come for 3 marks because they want to know the answer of 3 questions. 1 mark for current liability, 1 for current asset, and 3rd for liquid asset. Okay, so this is the point. Now, next question. Devika Limited has inventory of this. Their total liquid asset are 1 lakh. Liquid ratio is 2:1. Calculate current ratio. See, my dear children, this is the smart question we can say. Because current ratio, you know that current ratio will be CA and CL. Current asset divided by current liability. So the examiner or paper setter is very smart. In place of asking you to calculate current asset and current liabilities, they are saying to calculate current ratio. Okay, now what to do? Yes, children, what to do? Please let me know how to do this question. Yes, first of all, we have to calculate current liabilities. Okay, yes, very good. See, quick ratio means liquid ratio. Formula is liquid asset upon current liability. So in place of liquid ratio, we have to put 2/1. We know that liquid asset is 1 lakh. So we can calculate current liability by cross multiply. So now current liability is 50,000. Okay. Yes. Next is how to calculate current asset. Yes, please. How to calculate current asset? Simple. Liquid asset plus inventory. So here, liquid asset given in the question is 1 lakh. Inventory given 20,000. So now current asset is 1,20,000. So now current ratio will be CA upon CL. CA given 1,20,000. CL given 50,000. What will be the answer? 2.4:1. That's why I can tell you this is a smart question, because by this question, they are asking to calculate current ratio. But first of all, for calculating current ratio, we have to calculate current liability and current asset. Then we can come to know the ratio. Okay, children, note down the easiest way. Whatever things given, whatever information given, put them in the formula. And the thing which is not given, you can come to know by multiplying or cross multiplying. Put the value in formula. Okay. See, in these two, the formula is similar, but we transpose the values. Here, this is CA minus LA is inventory, and here CA is equals to LA plus inventory. So what I want to tell you, see, just learn this formula. CA minus LA is equals to inventory and prepaid expenses. Okay, so if you want to know CA, your answer will be inventory plus LA. Clear? If you want to know LA, your answer will be CA minus inventory. So just learn basic formula, put the values, then you can come to know. Otherwise, you have to learn many formulas. That's why I'm telling you, learn the basic formula and concept. See, current asset minus liquid asset, then the difference will be treated as inventory and prepaid, because these are not treated liquid asset. That's why it is to be subtracted. So here I'm going to show you the answer. Current asset 1,08,000, current liabilities 24,000. And see this one, just now we discuss it. Current ratio 2.4:1. Next question. From the following information, calculate debt equity ratio, equity share given, preference share given, reserves and surplus given, long-term borrowings and long-term provision. It's very easy to learn the formula. Debt upon equity. Debt means long-term borrowings and long-term provisions, debentures. And equity means ES plus PS plus reserves and surplus. Note down. Debt means long-term borrowings and long-term provisions. Equity means ES plus PS plus reserves and surplus. Your formula will be 2:1. Debt equity ratio will be twice of equity here. Debt are 8 lakh while equity is 4 lakh. Children, note down. So debt equity ratio, debt means long-term borrowings, debentures, loans, provision. Equity means ES, PS, reserves and surplus. Next, proprietary ratio. Calculate proprietary ratio. Share capital given, reserves and surplus given, non-current asset given, and current asset given. What is the formula of proprietary ratio, children? There are two ways to calculate proprietary ratio. We can multiply it by 100 as well. Yes. See, proprietary ratio is equals to equity upon total asset into 100. Here, equity means share capital and reserves and surplus. Total asset means NCA and CA. Okay, into 100. See, you can use the formula or you have to show the steps as well. Like how to calculate equity, you have to write in the exam. Please, in the exam, write the full form, share capital plus reserves and surplus. So here share capital is 2,50,000, reserves and surplus is 1,50,000. So equity will be 4 lakhs simply. Now total asset. You know the formula of total asset? Yes, NCA plus CA. Non-current asset 11 lakh. Current asset 5 lakh. It means total asset will be 16 lakh. Use that formula. E upon TA into 100. Proprietary ratio is in percentage. E upon T total asset into 100. Yes, now we can see that theory may also come in choice. So Lala Limited and Bala Limited use different accounting policies for inventory valuations. See, in when you will go in higher classes, then you will see there are various methods of calculating of inventory. LIFO, last in, first out. FIFO, first in, first out, or average. So there, every organization may use different policies. So these variations mark on cross-sectional analysis and comparison of these two firms was not possible. So identify the limitation highlighted in the above situation and any two other limitation you have to write. See here, this question may come for 3 marker as well, because one is for this point and they want to know two other limitations of ratio. See First limitation, because they are using different policies. So variation of accounting practices is the limitation, and other two limitations are basically two limitations that is common in every point, that they ignore price level changes and they ignore qualitative aspects. See, in this chapter or in financial statement, that is the major drawback, that we use only quantitative data. Qualitative is ignored. That is the point. Please note down. This is the theory question. Theory may also come. You will have one internal choice. Internal choice in question of ratio. Then next, calculate trade receivable or debtors turnover ratio and average collection period. That question came in CBSE. Credit RFO given, debtors 1 lakh, bills receivable 1 lakh. See here, that opening and closing not given, so we can take these only. So trade receivables are a wider term. Okay, so average collection period. Now see what I want to tell you, that yes, children, this is trade receivable turnover ratio. Net credit sales or net credit RFO upon average trade receivables. Children, here in this question, trade receivable, we can do by this way, debtors plus bills receivable. Okay? Credit RFO, because trade receivables are related with credit sales. Okay, so now here this is 12 lakh upon 2 lakh. See, in this question we cannot calculate average because only 1 year data is given. So this is 6 times. Now average collection period, number of days in a year upon trade receivable ratio. Yes, that can be in days and that can be in months as well. 12 upon TR, then your answer will be in months. And if that is 52, trade receivable turnover ratio, that question was in CUET, then it will be in weeks. So for days, for months, okay, for weeks. Average collection period means what? See, you can use debtors turnover ratio, you can use trade receivable turnover ratio, then average collection period. Number of days in a year, and if they want to know that in months, simply 12 upon 6 you can write 2 times. So please read the question carefully. They want to know in days or they want to know in months. Okay, please check that. Formula is this: net credit revenue from operation, which is given in the question. Sometimes the question came with total revenue from operation and they gave you cash RFO. Then deduct that cash RFO from total. So you will come to know credit. Now this is the question for you. This is creditors turnover ratio. See, my dear children, creditors turnover ratio is also known as trade payable turnover ratio. Here I am going to show you TPTR, trade payable turnover ratio. The formula is with net credit purchase upon average trade payables. This is also known as creditors turnover ratio. Now you can think that what will be the trade payables. So in this question, trade payables means creditors and bills payable. Whatever given in the question, you can add these two, creditors and bills payable, but don't take reserve here. Okay, so creditors turnover ratio, net credit purchase upon average trade payables. Okay, 6 times simply. Now in this question, cash purchase also given, but we have to use only credit purchase. So to calculate credit purchase, what to do? Total purchase minus cash purchase. Yes, children. And see here, average accounts payable, only 45 given, we have to take 45. Now, simple. Average payment period, APP, how to calculate? If that is in days, that is 365 upon TPTR. If it is in months, that is 12 upon TPTR. Okay, so here 12 upon 2, that will 12 upon 6. That is 2 times, 2 months. It means they have to make the payments duration of for 2 months. Maybe it may come in days, so your answer will be 365 upon 6, approx 61 days. Yes, children, don't be confused here. Net purchase given on cash purchase given, but in formula you have to use only credit purchase. Yes, I am sure now you all are able to do the variety of questions. Here we have arranged various types of questions for you. Now, when we see this question, it looks very easy. So the student make the mistake in the first 25% of 6 lakh. No. See, read the question first of all. This is 25% on cost, not on sales. RFO is sales, but GP is on cost. Okay, see this point. Here I am going to show you how to that one. This is on cost. Okay. And GPR, the formula is GP upon net RFO into 100. But here GP is not given. Okay, children, how to calculate GP? This is 25% on cost. In your childhood, I am sure you must have learned the method. Okay, this one, GP 25% on cost, on sales. Okay, and the same formula which you use in your childhood, that sales price minus cost price, you will come to know the profit. But how to calculate this one? Here I am going to show you. This is the way. Cost price 100, let cost price is equals to 100 rupees, GP 25%, it means 25 rupees. So if cost price is 100, profit is 25, selling price, I am sure you all are able to do that. that is 125. Okay, 100 की चीज है, 25 rupees आपने profit कमाया, selling price आ गई 125. Use unitary method. Go back in class 4 when selling price is 125, then GP or P is equals to 25. Okay, when simple, when selling price is 1, then profit is 25 upon 125, or when selling price given in the question, this is the selling price, my dear children. RFO is known as selling price, 6 lakh, then GP is equals to 25 upon 125 into 6 lakh. So your answer will be 1,20,000 rupees. So the profit is 1,20,000. Now see the formula, simple. GP 1,20,000, RFO is 6 lakh into 100. Your answer will be 20%. If you calculate 25% of 6 lakh, your answer will become wrong. So check that question, read the question carefully. Okay, children? So I'm sure you all are able to do these type of calculations. You have learned unitary method and that type of question in your childhood. And if you want to save the time, just read that. If it is on cost or if it is on sales. Next. From the following information, calculate ROI. This is the CBSE question that was in exam, return on investment to be calculated. And this, be careful about that here. Net profit after interest and tax is given. But in formula, we have to use net profit before tax. Clear or not? This is the formula. EBIT means earning before interest and tax, or you can see net profit before interest and tax. Clear? This is capital employed. Your formula will be, okay, simple, net profit before interest and tax upon capital employed into 100. Okay, upon capital employed. Net profit, this is, be careful, this is given after. So what to calculate? Just calculate before. This is net profit after. Okay, profit after interest and tax. So what to do? Just add the tax. Okay, and add the, yes, interest. Very good. So interest from here, 12% of 4 lakh. Here I am writing 12% of 4 lakh. That will be 48,000. Or you can write the note, because profit after given, because net profit after tax given, so we have to calculate before. Now capital employed. Just now I told you, capital employed means equity share capital plus preference share capital plus reserves and surplus. So your formula will be earning before interest and tax, or profit before interest and tax upon capital employed into 100. See what I want to tell you. Be careful. Profit after interest and tax. Interest and tax. This is the point which I want to tell you. If profit before given, we just put that in here. No need to add tax or interest. But here, because it is given after, so we have to add these. Note down, children. And how to calculate interest? You know that interest is given only on debentures or here, not on preference share. This is the difference between debenture and share, that interest is to be given on debentures and dividend is to be given on shares. Okay, children? Next, a very good question. Calculate following ratios from the following information. Current ratio given, acid test ratio, operating ratio, gross profit ratio. Now, one by one, we have to calculate. That question may come for 4 marks. Current ratio is equals to CA upon CL. It is given clearly. CA given 35,000, CL given 17,500. Your answer will be 2:1. Now next, acid test ratio. Acid test ratio means liquid ratio. Simple formula LA upon CL. In this question, LA means current asset minus inventory. Okay, so upon CL, here 35,000, inventory is of 15,000. Clear, children? Current liability given 17,500. So you will come to know that 20,000 upon 17,500. Your answer will be 1.14:1. Now, please let me know. Third one, operating ratio. How to calculate operating ratio? Yes, children, you calculate that. How to calculate operating ratio? Please let me know. We have calculated many questions. Yes, operating ratio is equals to CORFO, cost of revenue from operation, plus operating expenses upon net RFO into 100. So here, CORFO given 30,000, operating expenses given 20,000, okay, and RFO given 60,000 into 100. So that's what I'm telling you. If you learn the formulas, that topic will become very easy for you. Just put the value and you can come to know that 50,000 upon 60,000, your answer will be 83%. Okay, now last, how to calculate GPR, gross profit ratio. Simple formula, GP upon RFO into 100. But in this question, GP is not given. So, first of all, we have to calculate GP. Okay, so GP is equals to, as I just now told you, RFO minus CORFO. Revenue from operation minus cost of revenue from operation. 60,000 minus 30,000, that will come 30,000. Okay, so GP is 30,000. RFO is 60,000 into 100. So GPR will be 50%. Got it, bachcho? GPR will be 50%. So see the way you have to show it, that question, because this include 4 parts, that's why it will come for 4 marks. Clear? See the way Please don't forget to write the formula because you will have marks for formulas as well. Step marking is there in accountancy always. See how to do that. Current ratio 2:1. Asset test ratio 1.4:1. Okay. Operating ratio 83.3%. GPR 50%. Next question. Now, here I am going to explain you new added topic. See, this year CBSE has added 4 new ratios. So, see that question carefully. Net asset turnover ratio, which is also known as capital employed turnover ratio. And another is fixed asset turnover ratio by following information. Now, children, these ratios are added this year. That's why I'm telling you to look at the screen carefully. Net asset turnover ratio and fixed asset turnover ratio. Net asset turnover ratio is also known as capital employed turnover ratio. The formula is net RFO, net revenue from operation upon capital employed. Okay. And fixed asset turnover ratio, simple formula, net RFO upon fixed asset means non-current asset. So don't afraid by these new added topics. Just learn the formulas. Okay. See here, share capital given, reserves and surplus given, long-term debt, net RFO, and fixed asset. So what to do for net asset turnover ratio? That may come by another name as well. This is the formula. Net asset turnover ratio, simple formula, net RFO upon capital employed. So net RFO given in the question, that is 45 lakh, and capital employed also we have to calculate. Okay, or we put that in formula, that will be 3 times. Now fixed asset turnover ratio, net revenue from operation upon net fixed asset. Please don't forget to learn these formulas. Everything given in the question, but you have to put at the right place. Fixed asset turnover ratio, net RFO upon net fixed asset. See this question? Net RFO given, net fixed asset given. You have to just put the formula and answer in times. Okay. Answer in times. Because in liquidity ratio, we give the answer in is-to. Okay. And in solvency ratio is to pure ratios, but in activity ratio, that is in times, and in profitability ratio, that is in percentage. Okay. Now next question. A very good question again. Determine return on investment. See, they merge two varieties, return on investment and net asset turnover ratio. This is a new added topic again. Okay, see, the question is profit after tax given 6 lakh, tax rate was 40%. See, be careful, this is profit after tax. Okay, now debentures, 10% bank loan, 12% preference here. 2 part of interest, debentures 15%, bank loan 10%. Equity share capital, reserves and surplus, sales means RFO given and sales return also given. That is 15 lakh. Now, we have to see the answer. See, return on investment, EBIT upon capital employed into 100. See, first of all, we have to calculate earning before interest and tax, profit before interest and tax, because profit after tax given. So we have to calculate the tax rate, that is 40%, Okay, it means 6 lakh is for 60%. Interest we have to calculate in these two. Okay, here I am going to show you how to do that. Yes, tax, see 6 lakh is for at 60. We have to calculate for 40. So that will come 4 lakh. This is tax. Now someone is asking about calculating of interest. So for interest, there are two parts, 15% of 20 lakh, 10% of 20 lakh. Okay. So first 15% of 20 lakh, 3 lakh, and then 10% of 20 lakh. That is 2 lakh. It means total interest will be 5 lakh. So the earning before interest and tax is 15 lakh. Capital employed, clearly you know that capital employed means preference share, equity share, reserves and surplus, long-term loans, bank, etc. So this is capital employed. Okay, now put that in the formula. And just now I told you net asset turnover ratio formula is net RFO upon capital employed. Net RFO given in this question, this is sales minus sales return. So by this way you can come to know net RFO. Net RFO means sales minus sales return. That's why it is 3 crore 60 lakh. I'm sure you all are able to understand this. See, return on investment will be in percentage while net asset turnover ratio will be in times. Be careful. Write down the suffix always. Okay. See, this is times in activity ratios, percentage in profitability ratios. So you will write the formula, you will write the suffix, show the calculation properly. If you will write the formula, you will get the marks for that also. Please note down. Yes. So now a business has current ratio of 3:1. Liquid ratio 1:2:1. Working capital is 1,80,000. Calculate total current asset and value of inventory. Okay, simple. Just now I told you how to do that question. This is CA, this is LA, and when we subtract CA and LA from CA, we can come to know the inventory. Okay, but here, see what they have given, working capital. Okay, so in this one, for working capital, we have to use a very simple formula. CA minus CL is equals to working capital. This is CA, this is CL, and that will be equal to 1,80,000. Okay, see here, 3x minus 1x is equals to 1,80,000. Okay, CA minus CL is equals to working capital. So 2x is equals to 1,80,000. X is equals to 1,80,000 divided by 2. X is equals to 90,000. 90,000 is CL and CA 3 times. Okay, so 90,000 into 3, that will be 2,70,000. Yes, children, I'm sure now you all are able to understand the process. See here, what I want to tell you, note down current asset minus current liability will be working capital. Okay, so by this formula, you can come to know. Okay, and when you calculate the current asset, after that, you can come to know the inventory as well, because inventory is equals to current asset minus liquid asset. Clear? Any other doubt? Next, for RFO, same way here, inventory. So if Deva want to know about the inventory, current asset minus liquid asset, then you can come to know the value of inventory. So if X means current liability will come. Okay. So you can put the value in the formula. Now see how to sign up or log in that aspiration.ai. This is for your helpline, board helpline, CBSE. You can have this page, and with this page you are able to get the board helpline, NCERT books, sample papers. Then you will have some help in exam strategy sessions. Mock papers you will get free of cost. You will have formula list. Telegram doubt support is there. And don't forget to join the next class of accountancy on Saturday for cash flow statements. See, you all are in my blessings. So join this group. You will have mock papers, daily worksheet. You will have daily quizzes as well. Like at 2 p.m. we put the quiz for 5 questions, and at 9 p.m. daily we give the answers. So daily practice questions are there. Okay, children. And still, if you have doubt, use the Telegram channel. I am there to solve your answers. Okay.